Okay, so in this video we're going to be taking a look at section 200.17, and it describes professional skepticism, and it says the auditor should plan and perform an audit with professional skepticism, recognizing that circumstances may exist that cause the financial statements to be materially misstated. Unfortunately for us, the AICPA defines professional skepticism for us, so let's go to that definition. Okay, so here's the definition of professional skepticism. It's an attitude that includes a questioning mind, being alert to conditions that may indicate possible misstatement due to fraud or error, and a critical assessment of audit evidence. And so the AICPA also provides us interpretive guidance of how to use professional skepticism in our audit. So let's go down to those sections. Okay, so here are those interpretations. So first it says that professional skepticism includes being alert to the following. Could be audit evidence that contradicts other audit evidence that you obtain, information that brings into question the reliability of documents and responses to inquiries that you were going to use in audit evidence, conditions that may indicate possible fraud, or circumstances that suggest the need for audit procedures in addition to those required by GAS. So then if you're alert to all of these items, hopefully that will reduce the risk that you would overlook unusual circumstances, that you would overgeneralize when drawing conclusions from audit observations, and that you would use inappropriate assumptions when you're determining the nature, timing, and extent of the audit procedures and results of those. So when the auditor is assessing the audit evidence, he should question management or those charged with governance regarding audit evidence that seems contradictory, or that the reliability of the documents or the responses from inquiries are in question. And he should also make sure that the audit evidence is sufficient and appropriate in light of the circumstances. So if there's a high risk for fraud with a single document that you're using as audit evidence, you should do some additional procedures to make sure that that document is reliable. But this doesn't mean that you have to operate under the assumption that there is fraud occurring. The auditor needs to have a questioning mind, but also should generally be trusting of the client unless something comes up that may cause them to believe otherwise. So he could accept the records and documents as genuine unless something comes to his attention that's contrary to that. And in that case, he should investigate further and determine what modifications or additions to audit procedures should be done. And so the auditor neither assumes that management is dishonest nor assumes unquestioned honesty of management. Having said that, the belief that management and those charged with governance are honest and have integrity doesn't relieve the auditor of the need to maintain professional skepticism or to obtain enough evidence to get satisfied with reasonable assurance. So then the decision not to perform a procedure wouldn't have a good excuse of we felt that management was honest and has integrity. The auditor should make an effort to obtain the appropriate evidence under the circumstances.